On today's show, we're talking markets, we're talking gold, silver, and Bitcoin, and we're talking backdoor Roth conversions.
Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to Dennis Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
And I'm Rabih.
Yeah, you are. I was given crap, Rabih, last week. Shout out, Studi. We love you. You know what I'm about to do. She messaged me after last week, and she was like, "You did not bring enough energy on that show. You were out for a couple weeks because of back surgery." She's like, "I was hoping you'd give me like a more oomph in your yeah, you are." So I tried to do it better today. Hopefully that was better. I'm sure I'll get some notes.
Every time you say yeah, you are, like my social battery charges for the whole week until the next episode. So we're good.
Well, we have other things to charge your social battery because we're also going to talk about one more thing. So we've got some new nicknames we have to highlight. One really bad, and that's on my end, and then one really good for you. So let's hit the bad first. Rabih, I heard we had three events last week. I did not go to any of them. The team was so nice to let me rest. But we had 3 events. We sent off little factions of our team to 3 different places. We were back east. We were in Denver. We were in, I can't remember the last one. Anyway, we were all over the country speaking and all this stuff. And one of the places, I don't know where, but I was told later, we had a booth. And you want to know what my new nickname is, apparently, Rabih? Someone came up and asked. You want to know? Did you hear this already?
I didn't hear it online.
Did you hear what they asked?
Funny.
They were like,
funny.
"Hey, where's the big guy?"
Yeah, the big guy.
Where's the big guy? And then he's like, "Oh," and then I guess they started talking like, "Who are we talking about?" And I was like, "Oh, the mountain." But I'm just the big guy now. That's what we've devolved to.
I like to think of it positively. Like your stature, you're a very tall man with a strong build, right? You're intimidating when you walk into a room. Yeah, so I would look at it positively. It's like big guy.
I will.
If we're thinking of a guy, it's big guy, you know?
Okay, I'll take that. I like the positive spin. I will take that. The team was giving me some crap for that, rightfully so. Now let's get to the good. Let's get to the good one. And I'm going to pull it up.
I don't see positives in the next one, though.
There's a ton of positives. There's a ton of positives in this one. Someone sent, for those of you that don't know, the show is brought to you by Dentist Advisors, if you don't know that by now. So we talk to hundreds of dentists all over the country. They, book the free consultation button. And what happens when they do that is we send out, so that, they get on the calendar with someone on our team to talk to us. And then we send out what we call a discovery survey. So it's just, they can kind of tell us a little bit about themselves. We can be prepared to talk about what's important to them on that call. But one of the questions on that is, as you consider your options for wealth management, what is it about Dentist Advisors that interests you? And here is the word for word response from this person. After they gave us so much love about the podcast, which was so nice. But this is word for word. It says, "I really appreciate your approach to financial planning and advising compared to other advisors. Plus, I trust Rabih to manage my portfolio. Guy is a walking, talking cash GPT." I have no idea if that was intentional or if that was a typo. Either way, you are now known as Cash GPT.
It sticks, huh?
It's done. It's done.
I thought of like trademarking it for a second. Maybe get
you should.
Too. Like it's really cool. But then you expand GPT and it's like Cash, generative pre-trained transformer.
No one knows that, Rabih, and no one
that
cares.
Will not fly anywhere.
You are officially Cash GPT. So. And I sent that to the whole group and I was like, this is incredible. This guy gets it. You totally are that. So Cash GPT coming at you. Now people are going to be asking, where's the big guy and where's Cash GPT?
Exactly. Well, whoever wrote this, I appreciate it. Thank you so much.
You are so nice. We appreciate it. And we had to bring it up on the show. So let's jump in. Rabih, we're talking markets, and I know you specifically wanted to talk about gold, silver, and Bitcoin, but this is all going to kind of lead to a lot of big topics. So
yes,
off and away we go.
So let's talk markets. I think we want to talk markets simply because as of today, February 6th, we got an all-time high on the Dow Jones index. And it wasn't just an all-time high. It crossed the 50,000 level think the last time we, made an announcement about crossing the 40,000 was probably a year and a half ago. So it's kind of a big deal. Like,
if I was still messing with the sound effects board like I was about a year ago or so, a year and a half, I would be hitting that number, that button all day, and you'd be so mad, but I'm not going to. Maybe we'll bring it back.
Let's not bring these down.
If we get popular demand, if people start messaging in and saying they want us to use it, let us know. We will.
Oh my goodness.
I would be smashing that button right now. That's a big deal, though.
It is a big deal. And it is, what I found really interesting is that the Dow Jones is crossing an all-time high, but the NASDAQ and the S&P 500 aren't. So just to give a revision for listeners for the first time, the Dow Jones includes 30 companies that are deemed, according to some, committee, that they are the 30 most important companies in the US. So it has stuff like Apple, Nike, McDonald's, Exxon, Walmart, like these big companies that when you think American corporations, like you think of them, right? And these companies, because they tend to be very large and very entrenched in our economy, tend to be more stable, less sexy names. Then you've got the S&P 500, which has the largest 500 companies in the US. They just look, what are the largest 500 companies? We're going to put them in an index.
Market cap, right?
And we're going to look at them based on market cap, correct. And then we've got the infamous and famous NASDAQ, right? Which includes the top 100 companies, technology companies in the US. And that is where, the hype usually lives. The sexy names are, it is the index that will go up the fastest and crash the fastest type of thing. And what is interesting right now is that probably for the last couple of months, we've been talking about like, did AI create a bubble? Is AI inflating prices? And if so, if that is the reality, we would expect the NASDAQ to drift away so far ahead from like Dow Jones or the S&P 500, simply because it has the names that are getting inflated. And I would say since mid-December till now, the bubble didn't pop. But what's been happening is that a lot of institutional portfolio managers have been tilting away and shifting their portfolio where they're selling their overweight, appreciated, accumulated technology stocks and redistributing them on their other companies in their portfolios onto other sectors. So they're moving out of the technology sector.
It's like a rebalancing effect?
They are rebalancing, right? They're trying to make their portfolios robust again. And they're moving more into like utilities, healthcare, defensive, other staples, communication. Usually, if there is a bubble that is bursting, you do not see this rotation effect. You do not see them slowly removing money from technology and putting it in the other assets, which Dow Jones is a good reflection of it. You just see it crash.
You see sell-off by prices dropping.
You see a panic.
Yeah.
Tech is down. Actually, let me pull it up. I have the data for it. Tech is down, like NASDAQ, from its high, only 3.9%, which is nothing, right? It is definitely nothing. This is a very normal fluctuation range. So what happened? We went through, in the markets, we went through a couple of months. We were worried that these AI companies are just giving each other money in circles, and they're inflating each other's balance sheets, and this could be a bubble. But now what we're seeing is that the rest of the market is catching up to technology rather than having technology crash back to the initial levels where it was at par with the rest of the market. That's a very healthy sign. This is a very healthy sign. This means that there's technology, AI, software, they're pushing the envelope, they're growing our economy. And then when they themselves become overheated, instead of us crashing, we give room for the markets to breathe and let the rest catch up to it. So we can get ready for another, wave of pushing the envelope again and growing the economy. Equities markets couldn't be healthier.
Do I hear prediction? Is it prediction time? Is Rabih making guarantees?
No, it's not a prediction, but you go to the doctor, they take your pulse and they know if something is wrong, but they cannot predict that you're suddenly going to become Superman, right?
Yeah.
This is the same thing. We're taking the pulse and you look healthy. Keep going.
Got it.
This is what it looks like.
So you're basically saying that any headlines that are out there of like crash or technology down or whatever, I'm sure there's many, because this is what the media does. It is the epitome of noise.
It is the epitome of noise. And the reason these are robust is because these companies depend on consumer spending and economic activity, which we mentioned on the last podcast are great, really great numbers, right? And they are anchored to something very fundamental, which is their earnings and their profits and how much money they are making. And as we're seeing earning reports where Most of the time, they're beating their estimates. They're beating their estimates, and in the situations where they're not beating the estimates for revenue and earnings, they are below. It's because they are investing more than they thought they need to invest in AI. So it's more expenses on investment rather than, inefficiencies or bad costs, etc. So of course, the labor market is being affected by that. A lot of the announcements come. We've got really great numbers, but we're also firing people. We've got really great numbers, but we're also firing people. But so far, from how it looks for the economy, especially the ones that are grounded with fundamentals and earnings, it is really good. It is acting in the healthy manner that we expect markets to act.
Good. That's all good.
Yes, but...
Oh, there it is.
But.
Dang
the
it.
big but.
You got me with that. I didn't think it was coming. I thought you were just going to end it there and say, things are great. Have a good weekend, everybody.
But.
But before you do,
before we do, if you're looking at assets that are not anchored to fundamentals, assets that you can't see earnings and something that supports them internally, assets that their fate is dependent on supply and demand and the emotions of fear and greed in the markets, that's a completely different story. That is where we enter the realm of the noise and leave the realm of the signal.
Yep.
So, are you ready for some good numbers?
I'm so ready for that. That was a beautiful setup with that butt.
Yes.
I love it.
So, on Friday, we had probably the largest or one of the largest crashes in silver ever recorded. Silver, as a commodity, crashed 30% in one day. Gold crashed around 11%, and Bitcoin has been on a bloodbath. So let's talk about each one of them and talk about what triggered them to happen. Okay?
Yeah.
I hope you didn't have any silver or gold in your portfolio.
No, but I will say I blame Jake. Shout out Jake Elm on our team. He brought this up in a team meeting right before the crash, and he was like, have you guys seen silver lately? And I believe he's the one who triggered it.
Yeah, he did send his famous Money Talks a newsletter. I read it every single Monday. I really love it. And he said, well, probably as I'm writing this, I'll probably jinx silver. And I couldn't even wait to finish reading it. I went there, replied, it's like, it already crashed 30%, dude.
You did it. It's all Jake's fault.
It's all Jake Elm's fault. But yeah, silver had its crash down from the highs to the lowest point. Gold dropped 13.8%, and now it has recovered, and it's only down 8.2% from its low. So it recovered 5%, but it had a crash of 13%, 11 of them in one day, right? Silver had the 30% crash, then recovered for a couple days, and then crashed back down, and now we are 33% below the all-time high from where it started. So it's really wild, because for those who decided to buy silvers on the unfortunate day of February, February 2nd, when the market was crashing, etc., they have now lost a third of their portfolio. They have put 100 grand, now it's 66 grand. For the 66 grand to go back up to become 100 again, that portfolio does not need to grow by 33% to get there. That portfolio needs to grow by 55% to get there. How quickly will silver climb back up 55%? And you were able to, you took a 30% hit, but you need a 55 to come back. And these are, these are the rules of the market, how compounding works. This is the math. That's why you try to eliminate really big losses, and you do that through diversification. But this is kind of the crash that has happened.
Well, we were just talking about this, right? In our oh, you weren't in there, Rabih. I was like, oh, we just talked about this. So we have a mastermind kind of. So our advisors get together every single week where we sit and talk about case studies and just help each other out with client situations. And this is why I tell people, I tell Dennis all the time, you're getting an advisor, but you're actually getting the collective knowledge of Rabih and our whole team, because we meet so frequently to swap ideas and share stories. But one of the things that Jake brought up, the guy who just jinxed silver, so he had a client who brought this up to him and who was really pushing about concentrating in some different positions, Bitcoin specifically, and a couple of other things. And this was before what happened, right? And he did such a good job as he was explaining to us what he said, and he was sharing this in the sense of this was such a cool experience talking to this client, because in the advice business, as I'm sure dentists can can relate. Sometimes it's hard to get people to listen to like rationality when they've got emotions or things involved. Dentists probably see the same thing with patients, but the dentist, the client, had talked about how they were trying to fast track retirement and get to work being optional sooner, and they thought, understandably so, that concentration in these positions was going to do that. And he was able to explain, Rabih, exactly what you're saying, just to bring this to life, that actually, probability wise, what you're doing by concentrating in these positions is most likely setting yourself up to delay retirement
100%,
because the math of what you're explaining. So it's cool that this came up just this week in a meeting in a real life scenario. And at least so far, after that conversation, the client was like, oh, I totally get it. Like, that makes sense.
100%. And it's not really, our fault. We do not think linearly, but markets and compounding.
When you say our fault, you mean people, humans.
Humans, yeah. It's not humans' fault.
It's not Dennis Advisor's fault, people. It's not.
We're all susceptible, and it's because our brains think linearly. We add 1 + 1. The market does not think linearly. It multiplies 1 times something else. So I was chatting with my younger brother the other day, and he's still in college, right? And we're thinking about something, and he was mind blown by the idea. It's like they asked him this question in class, and it's like, you've got a pool that has a certain amount of water in it, and then every single day, the water quantity doubles. So at what day out of 30 days, if it gets full by day 30, what day out of the 30 days will it be at half the amount, half full?
29.
And exactly. It is 29. Because on day 29, it's already 50% full. And by day 30, it's going to double and multiply. Can you imagine how many people, including my brother in his class, thought it was going to be day 15? And that is because our brains think linearly. The same thing, same analogy applies to stock market crashes. How long does it take, a portfolio to go from 100,000 to 1 million? It's going to act like that pool of water, and it won't be in equal portions where in half it will hit 500K. So I think it's an acquired skill where you have to really start rewiring to your brain to think in terms of compounding, just so you now talk with the market with the same language, and hopefully you can get an early retirement just by learning the rules.
I'm so glad you brought this up, Rabih. This is why you're Cash GPT, because you bring the math to like the real life stories that we hear and we see all the time. And one of the biggest challenges we see dentists have, which is again understandable, we're all human, but the shiny object syndrome, right? It's wanting to fast track. It's wanting to get into this private investment or that private investment. And one of the main things that you're alluding to is because we don't think in compounding terms, we think in linear terms. And because of that, it is so understandable as to why it feels like this takes freaking forever. Because the first 10, 15 years, it feels slow.
Yes.
But you've got to break through that threshold to reap the rewards of the compounding effect, which it's all a back end effect.
Mm-hmm.
It's all a back end effect. And then it becomes this like massive multiplier. But try telling that to a 42-year-old dentist who's like, dude, I've been grinding forever and I feel like I'm not making progress because it's not a linear approach. And we hear this story time and time and time again. So I'm just glad you brought that up of like showing the actual math behind it and making people feel normal. Like this totally makes sense.
It makes sense, but it's also not supposed to be easy. Like, you and I are lucky because we're surrounded by other people who think like us. And whenever we see each other falling off the track and starting to think linearly, we do that accountability to each other. And it's like, no, you have to think in terms of a compounding perspective about this. So yeah, it is normal that markets react that way. And it is also very normal that it is emotionally frustrating that it doesn't happen the way we do it. But this answer to it is just, it's very simple. Just have a conversation, whether it was, with your pal who really knows markets, not just the pal who throws out random stock names, or with a financial advisor, or with another professionals who understand markets, to be able to kind of find a balance between these two conflicting feelings. Like, you want to get there quickly, but you also need to understand that patience is part of the game. And if it's hard to do it alone, it's so easy to
It is hard to do it alone.
Yeah, it is hard to do it alone, but it's so easy just to get yourself back in the right perspective.
This is why when people, I get asked this all the time. What is your word? Like, are you worried about AI and like technology taking over your your role and like advisors, and you're upending your industry completely. My answer to that, I could be totally ignorant on this, but I'm like, absolutely not, because all that stuff is enhanced tools for everyone to use, which is great. It enhances knowledge. It enhances the math side of things for sure, which is amazing, but it will not remove the true value, in our opinion, of having an accountability partner to reshift and ground you when those situations come up where you're like, man, what am I doing? I'm going to blow this up. I'm going to put everything in Bitcoin. And if you don't have someone in between that impulse and that action, like you can't, AI does not replace that.
No.
And so
have
that's
you ever gotten advice from ChatGPT?
Yeah. I mean, I've used it, but it's not the same as talking to you, because I'd rather talk to Cash GPT.
Okay. I set myself up to that.
You really did.
I should have gone there.
That was your fault.
It is my fault. But yes, like the distance between, like the time distance between the impulse of buying Bitcoin and, losing, let me pull up the exact number, losing 44% of your money between October and today on Bitcoin, it could be easily avoided. And Bitcoin has been crashing. Bitcoin has reached 125K in October 2025. Remember, we had Jake on the podcast. We were talking about Bitcoin.
It's always Jake.
I'll also blame this on Jake. And we talked about, MicroStrategy and Michael Saylor, and how there are so many companies that are leveraged on Bitcoin. And
they're in big trouble right now, right?
They are in big trouble because him, along with other crypto companies, are leveraged, where if the price of Bitcoin goes down, their balance sheet is affected. They have to sell more Bitcoin, which exasperates the selling pressure on Bitcoin itself. Bitcoin has dropped from 125 back in October 2025 to yesterday, not today, down to 60,000. Okay. Oof. Today rebounded from 60,000 to 70,000, right? But it's still 70,000. That is a big drop. As you can see, gold, silver, and Bitcoin all went down. And it was very fascinating, but gold and silver went down for a certain reason, whereas Bitcoin went down for a completely different reason. And I think that's very, very interesting. So the silver crash and the gold crash that happened, they happened on Friday last week. On the same exact day, they announced who the new chair of the Federal Reserve is going to be. And that is Michael Warsh, Kevin.
Kevin.
No, Kevin
He's
Warsh.
a Kevin.
Yeah, he's a Kevin. Kevin Warsh, right? Well, I'll get a couple of years of him to memorize his name, right? But his name is Kevin Warsh. And everyone on, who trades the markets has been binge watching hours and hours of previous interviews he's done that are on YouTube to understand what his philosophy is. How do we expect the Federal Reserve to go forward? When you say
everyone, you mean you, right?
Me and a couple guys.
You're like, I got a Facebook group. There's 4 of us. Yeah.
Me and a couple AI chatbots.
Yeah.
So
it's me and my brother and like my uncle. Yeah.
You should join sometimes.
Yeah, I'll get in. Yeah.
So, and he has a very interesting perspective about how the Fed should interact in the market. So the current Fed that we live in was a Fed of like, we're going to interact with the market a lot. We're going to keep interest rates high, but we're also going to do quantitative easing, inflate the balance sheet to be able to keep reserves ample. This is the word that they use, and keep the liquidity functioning in the economy. Warsh, on the other hand, thinks, well, we don't need interest rates to be high. We can have them down. And that will not create any inflation because we're going to shrink the balance sheet back down. We do not need a Federal Reserve that is $8 trillion in size. That is twice the size of NVIDIA, the largest company in the US, right? So we're moving it's still a Federal Reserve that cares about price stability, cares about, unemployment staying in check, inflation anchored, and, our financial future from a monetary perspective is in a good head. They're still aligned on the same goal. That is the mandate of the Federal Reserve, but the approach by which they're going to get there is going to be different. The current Fed is more data dependent, which puts them at the risk of being reactive rather than being proactive, right? Where this new guy coming in, it's like, no, we know where we want to take the economy, so we're not going to be data dependent, and probably communication wouldn't be as clear. If data shows up that is not in line with expectation, we're just going to consider it a blip. So it's a completely different philosophy, but hopefully the same good intention. While we still haven't seen him do any work, talk is cheap, but the talk that we have listened really instilled strength in the ability of the U.S. Economy to sustain this monetary world order that we live in, right? Like this monetary world order, no developed country at war with the US had troubles with its currency, right? Like right now, Japan, and probably there's going to be a bunch of podcasts about Japan, but currently now Japan is in a really, really tough position where they have so much debt. Their inflation expectations are getting de-anchored. They can't control the long end of their interest rate curve. So 10-year Japanese bonds, 20 years Japanese bonds, those are going up almost to the point where Japan is monetarily sitting on a cliff where it could collapse. But the current monetary world order, where the Federal Reserve of the US can support everyone, is going in trying to keep the Japanese monetary system on life support until it recovers, right? So the whole idea with this new Federal Reserve, the signal that was issued to the market is that this monetary might will continue to exist. And that puts a lot of credibility and support in American institutions. What happened that day is that all those who were worrying that probably Trump will never assign a new Fed chair and he wants to take over the Federal Reserve himself, so let me buy Bitcoin, let me buy silver, and let me buy gold to hedge because the whole world economy is going to crash. Well, now they notice that they were wrong. Whoever said that Jerome Powell is going to probably stay on the board and make complications and turn this into a political fight, and that is not happening. The expectation is that he's going to resign after his term ends, etc., went away. So the reality is that we're going to do business as usual, the way we do it in the Federal Reserve. The noise prompted people to go and hedge. So the moment that news came in and people understand the direction in which the Federal Reserve is going to go, they had to unwind these positions as gold and silver that didn't really make sense. And it all happened at the same time, and it caused the crash.
Shocker to me that the people who are incentivized to tell you the world's going to end were wrong. That's a shock. I can't believe that didn't come true, because that just seems so likely. So
I have another one for you.
Yeah, hit me.
But
oh gosh.
But didn't you say it is a shocker that those people who tell you the world is going to end? What are those people? Isn't Bitcoin supposed to be the player that is going to come up victorious if the world is supposed to be a lot of things?
Yeah, supposed to be a lot of
throughout
things.
This whole fiasco, Bitcoin was selling off. Throughout the whole fiasco, where there is a threat on the US dollar being the reserve currency, there's a threat that, the Federal Reserve will lose its independence. We saw gold and silver climb up to become the new store of value for a couple of weeks, whereas Bitcoin kept on going down. So this was like the situation for Bitcoin to prove that it is functioning the way it was intended, or what the whole rhetoric or narrative behind why buying Bitcoin should be there. And unfortunately, it did not fulfill that promise. So it kept going down on the occasion where it was supposed to be going up according to its narrative. And that has removed a lot of trust away from Bitcoin, which is why gold kind of stabilized, silver had a tip up, it's stabilizing, whereas Bitcoin is still crashing down. We'll see how long that it will last, but it seems like Bitcoin is all supply and demand, right? So is gold, so is silver. So the whole idea is that because there are no fundamentals, we really do not know how much they can fall and how much they can go up. It's all a matter of what the general emotion is of the day. So with Bitcoin, now that people are noticing that it's not fulfilling the purpose they expected it to be, a lot of people are unwinding their Bitcoin position. Will that change? Who knows? But what happened in this week in terms of the movement of Bitcoin, silver, and gold, along with a very definitive event that gives us a clear signal, says a lot about if a crash would happen, if a bad scenario would happen, where would people fled to safety?
I'm just waiting. Any more butts?
No.
Oh, we're done with those? Done. I didn't know.
It feels like a Netflix documentary. I've been looking at the markets this week and it's like, oh my God, look at these stories.
Yeah.
So
you were itching to get on here and talk about it. Well, as people hear Cash GPT and the brilliance, the people need to know, Rabih, that we got a new speaker for the summit this year, the Dennis Money Summit in in Midway, we changed up the location for the 3rd annual, and your very own Cash GPT will be there. So if you listen to Rabih, I listen to Rabih as I'm on here every week. If you want more of that, you should definitely check that out. I'm just saying, it just feels like an opportune time to talk about the fact that you are on stage this year talking about investing. And I truly not joking. It's going to be amazing. You and I have talked a lot about what you're going to speak about. You're going to want to be there. So it had to be said.
It has to be
and
said.
There is no but. There is no but. DennisMoneySummit.com. Okay. Anything else, Rabih, on the markets or anything there?
Stay tuned as new data comes in, but I hope we learn some lessons from this week about what it means to be a long-term, globally diversified investor, where assets that, are not anchored by fundamentals will do all the weird acrobatics that they do, and assets that are, anchored to fundamentals do what they're supposed to do and let you worry less about the markets and more about having a good life.
Yeah. Oh my gosh, I love that. Our friend Dr. Daniel Crosby, he's also speaking at the summit this year, has an amazing quote I've never forgotten that I think goes along with this, which is, always remember that get rich quick and get poor quick are the same sides, or the side of the same coin, two sides of the same coin. Wow, I bungled that. But it's true. Like, you cannot accept this get rich quick scheme or approach without also accepting the equal side, which is get poor quick. Two sides of the same coin. So you got to be thinking about that. I'm always thinking of that quote when we talk about stuff like this. Okay. Well, if the weekend just was not exciting enough talking about markets, Bitcoin, silver, all these things, Japan, then let's just add to it by talking Backdoor Roth conversions.
I thought you were going to talk about the Super Bowl, but we can leave that to later.
Oh my gosh. I've given up my prediction. I lost my streak. Although I will say I was going to be 50% right. If Bo Nix does not get hurt, Denver is in this game. Just saying. That is my plug. That is my justification. My Eagles pick was a homer pick. I fully admit it. I knew they weren't going to go. I had to pick them. But I feel confident if Bo Nix doesn't have a freak injury in the AFC Championship game, I guess the divisional game, Broncos were going to be there. Just saying. So I get a mini pass? No? Okay. I'll give myself a pass. I wanted to bring this up because this is huge. I think this is a big topic for dentists that I don't want us to take for granted and this is fresh on my mind because I just had a pretty extensive conversation about this with a client, with a dentist earlier today. And again, it's something I think as advisors sometimes we take for granted because we're talking about this stuff all the time. But he was super intrigued by it, and we talked for like 45 minutes and about his specific situation around Backdoor Roth conversion. So I just was like, hey, let's just bring this to the show. There's probably a ton of dentists out there that are thinking like, I've heard this. What does it even mean? Why does it matter? A lot of questions that he was asking. So I'm going to do my best to break this down like quickly and like hopefully high level. Rabih, you can be my check on this.
Yeah, I'll cascade back what I am.
You can cascade back what I say. So I guess we'll start here as a reminder. Traditional and Roth accounts, so a traditional IRA and Roth, are exact opposites of each other when it comes to the tax treatment of them. So a traditional IRA, the one that came first, is money goes into that account and you get a deduction for it. It's called pre-tax. It then grows tax deferred. And when you pull money out of it down the road, you're taxed on that money. That's generally how it works. Roth is exact opposite. You put money in, you get no deduction on the front end, and then you pull the money out down the road. It grows to theoretically infinity. You can pull all that money out down the road after 59 and a half with no tax liability. So that's the first kind of distinction to make. There are some nuances here specific to dentists that the government has added. Weird. I don't know why they do this, but made it overly complicated for dentists. And when I say dentists, is because dentists are high income earners. For the most part, they're making a lot more money than most people, so they fit this category. So what the government says is once you start to make too much money, you can no longer directly contribute to a Roth IRA. So that figure is if you are filing single, it's $153,000 AGI, adjusted gross income. If you are filing joint, once you're making $242,000 adjusted gross income, you can no longer directly contribute to a Roth. They just say like, sorry, this is not for you. So that is a lot of dentists. I'd say most dentists fall into that category. So enter the Backdoor Roth conversion. So this is why it's so dumb, Rabih, because the government knows this caveat is there. They openly let you do this, but yet they continue to have this income restriction on the Roth IRA. Don't understand it, but here we are. So if you have a 401k at the office, that's a little bit of a caveat. Here's what you can do, because there's also income limits on getting a deduction from making a contribution to an IRA. Again, assuming you've got a 401k at your office. Mm-hmm. So the government says you cannot directly contribute to a Roth if you make too much money. And also, if you got a 401k and you contribute to an IRA, you can still do it, but you cannot take that deduction anymore above a certain income threshold. And it's roughly the same income level. Does it all track?
Yeah. So there are two reasons why you can't contribute to a Roth. You either make so much money or you already contribute to a 401k or an IRA. Correct?
Well, so yeah, this is where it gets a little tricky. This is why when I was talking to my client today, I was like, man, this is complicated. We need like a board to draw this out. We probably should do this sometime and make like a video about it. The income restrictions on the Roth IRA are separate from having a 401k or not. So straight up, the government just says, like, if you make too much money, so 153 single, 242 is a joint, you cannot contribute to a Roth, period. You cannot put money into it as a direct contribution. If you did and got caught, they would make you back it out. So they just say, you cannot do this. The income restriction on the deduction for an IRA, right? So there's also an income restriction on you taking a deduction for your IRA contribution is contingent on you having a 401k at the office.
So if you have a 401k and you still deposited in an IRA, those IRA money will not get a tax deduction.
Yes, because what the government basically is saying is once you make too much money, we're only going to give you so many benefits for tax deductions on retirement plans. So if you make this much money, right, they have a threshold, and you have a 401k that you can get pre-tax, deductions, so you can make deductions for. Well, we're not going to also let you do an IRA and get a deduction. That's what they're saying.
Okay.
So this is a lot of dentists, right? A lot of dentists, especially practice owners, have a retirement plan at their office. They make too much money to directly contribute to a Roth IRA, and they're not going to get a deduction for their IRA contribution. So a lot of dentists are going to say, well, okay, I'm just stuck, whatever. I'm going to move on with my life. This is where the strategy we utilize a lot is there's a caveat to this. And this is how you would still get money into a Roth IRA. You'd make a contribution to an IRA, regardless of the deduction. In fact, you don't want the deduction. It's after tax money. You then just convert it to a Roth in the same year, in the same week.
And convert it means you're just moving the money from one account to another?
Literally paperwork. It's just an extra step as opposed to contributing directly to the Roth. You're putting it into the IRA first, and then you're going to go ahead and say, you know what? I'm going to transfer this from an IRA to a Roth IRA. That's why it's called a backdoor Roth conversion. So it's a way. So my client today was like, well, why would I even do this? I'm not getting a deduction. Why would I do this? The answer to that is the money you're putting into the IRA to do the backdoor conversion. You're right. You're not getting a deduction. That's after tax money. You pay tax on the money regardless. But because of that, that money's been taxed. So that is a sunk cost. The tax is gone. You've already done it. Now it's a matter of what am I doing with it moving forward? And would I rather have that money, let's say in this case, $7,500 is what you can max contribute to an IRA this year. Would I rather have that money sitting in my just a cash account doing nothing? Or would I rather have that sitting in a Roth and invested and growing, by the way, tax-free for the future? That's an easy answer. A lot of dentists don't realize, oh, I make too much money. My advisor or my CPA or whoever told me I can't do a contribution to a Roth IRA. You absolutely can. There's some caveats and there's certainly things you want to make sure you're being aware of how you do this, but you can do this via this back door. And by the way, assuming you've got the cash flow, liquidity, right? You absolutely should be doing this to build up Roth assets for the future. And in a lot of ways, it's the only way a dentist can or really should do it, because otherwise, depending on your income level, but a lot of clients we're working with is you got to maximize your pre-tax accounts as much as possible because you're making so much money. This is kind of a way to have best of both worlds. So if you want to go ahead and cascade that back, Rabih, that'd be great.
Honestly, what I learned so far is instead of you just depositing your money into your Roth, you have to deposit it in the IRA first and then move it to the Roth. Only if you meet a lot of conditions that in this situation, I'd rather just reach out to Matt to tell me what they are.
Yeah.
Honestly, the way you described it, if we started this segment saying, listen to this sexy tax loophole, it would have had a different way coming into my brain.
Yep.
But once you dissected it for me, and I was like, okay, these are all the stuff that I have to go through.
Yeah.
I'm like, I'm not excited about it anymore, although it's a tax loophole.
It totally is. And long term, it's not anything sexy on the front end. Dentists, understandably so, are like, how do I lower my tax bill now? Which again, we totally get and we want to. But as planners, we're looking at this over your lifetime. We're looking at your overall family situation. We're looking at your overall lifetime. And this is one of the most underrated strategies you can use for lifetime tax planning.
So you're not cutting your taxes in a single year, but overall, once you look back, you would have made a lot of...
So much flexibility in the future from a tax perspective. We're not going to go into this now, but Rabih talking about it being so not fun to listen to or to try to digest. There's another caveat here we'll save for another segment called the pro rata distribution rule. It's another caveat that if you've got money sitting in IRAs already, it gets more and more complicated. So we'll leave it there as a weekend teaser. But to your point, this sometimes gets brought up like, oh, backdoor conversions, like Roth conversions. Yeah, I should do that. And to your point, hopefully we're bringing some light to like, there's a lot of moving parts. You want to make sure you're doing it right. So talk to your advisor, talk to your CPA, talk to us if you need help. Like these are little optimization tactics that you should be thinking about for sure when it comes to your overall financial plan. And don't think for a minute like that, between you and a spouse or partner, this year at 7,500, it'll kind of gradually move up 15 to, 15 grand and then some as it increases over the next 10, 20, 15, 20, 30 years. That is a massive amount of money you can pile up in Roth assets.
Yeah. $1 million that you could either pay taxes on or not pay taxes on.
Exactly. Yeah, exactly. So yeah, definitely something to be thinking about. It's there's a lot of moving pieces to it, but it's an underrated strategy to be considering. So, Rabih, any other thoughts on that? And hopefully everyone's still awake after our
love it.
little boring, nerdy financial planning lesson.
I'm just very happy that I can just text you and ask you to make sure I'm doing my Roth conversion correctly.
Yeah, for sure. Okay. Well, if you are still here listening, you are definitely one of the cool ones, or you've got nothing else going on this weekend. If you listen to a monologue about backdoor Roth conversions, we really appreciate it. And if you want to talk to us, if you're sitting here thinking, man, I need help with this kind of stuff, we are here to help. dentisadvisors.com. You can book a free consultation. We'd be happy to talk to you and help you with anything from backdoor Roth conversions to how to handle your debt or just understand where all your money's going. That's what we're here for. And as I mentioned, we'd love to have you at the summit this year as well. DonnieSummit.com. Check it out. Come listen to Cash GPT. For now, Rabih, thanks for being here, sharing your wisdom. Everyone, thanks for listening. That was our 2 cents. Till next time, bye-bye.